Mastering cash flow statements. Key questions to ask. Let's talk about money, honey. You know I'm all about taking control of your finances, and that starts with understanding where your money is going. That's where the cash flow statement comes in. This financial tool is like a GPS for your money, showing you exactly where it's coming from and where it's going. Think of your finances like a flowing river. Money comes in, money goes out. The cash flow statement captures this movement. It's different from a budget, which is more like a plan. The cash flow statement shows what actually happened with your money. Why is this important? Because you can't make informed financial decisions without knowing your cash flow. It's the foundation of financial health. Whether you're saving for a house, planning for retirement, or just trying to stay afloat, understanding your cash flow is essential. So are you ready to take a deep dive into your finances? Let's get started. First, let's look at the incoming side of your cash flow statement. This is all about identifying your sources of income. For most people, this will be their salary from their job. But it can also include things like income from investments like dividends or rental income, side hustles or freelance work, social security benefits or pensions, and any other money you receive regularly. Now, businesses have different sources of cash inflow. Their primary source is usually sales of their products or services. They may also have income from investments or loans. It's important to track all of your income sources accurately. This gives you a clear picture of how much money you have coming in each month. And that's crucial for making smart financial decisions. Remember, knowledge is power. The more you know about your income, the better equipped you'll be to manage your money effectively. Now let's look at the flip side. Cash outflow. This is where we track all the money going out. It's easy to feel overwhelmed by expenses, but don't worry. We'll break it down step by step. Start by listing all your monthly expenses. This includes everything from your rent or mortgage to your groceries, utilities, and transportation costs. Don't forget about those little expenses that can add up, like your daily coffee or subscription services. Next, categorize your expenses. This will help you see where your money is going and identify areas where you can cut back. Common categories include housing, which is usually your biggest expense, including rent or mortgage payments, property taxes, and insurance. Transportation includes car payments, gas, insurance, public transportation, and any other costs associated with getting around. Food covers groceries, dining out, and takeout. It all adds up. Utilities include electricity, gas, water, internet, and phone bills. Healthcare encompasses health insurance premiums, doctor's visits, prescriptions, and other medical expenses. Debt payments include credit card bills, student loans, personal loans, etc. Entertainment covers movies, concerts, sporting events, hobbies, and other leisure activities. And savings include money you're setting aside for emergencies, retirement, or other financial goals. By categorizing your expenses, you can start to see patterns in your spending habits. This is invaluable information for making changes and taking control of your finances. Section 4. The bottom line. Calculating and interpreting net cash flow. Now that you've tracked your cash inflow and outflow, it's time to calculate the difference. This is your net cash flow, and it tells you whether you're earning more than you're spending or vice versa. To calculate net cash flow, simply subtract your total cash outflow from your total cash inflow. It's that simple. Positive net cash flow. If your inflow is higher than your outflow, you have a positive net cash flow. This means you have money left over at the end of the month. That's fantastic. You can use this surplus to pay down debt, invest, or save for your future. Negative net cash flow. If your outflow is higher than your inflow, you have a negative net cash flow. This means you're spending more than you earn, and it's a red flag. You need to take action to reduce your expenses or increase your income to get back on track. Understanding your net cash flow is crucial for making informed financial decisions. It's not enough to simply know how much money you earn. You need to know how much of that money is actually available to you after expenses. Section 5. Unraveling the mysteries. Deciphering changes in your cash flow. Once you've got a handle on calculating your cash flow, it's time to start analyzing it. This means looking for patterns, trends, and any unusual activity. Start by comparing your cash flow statement from month to month. Are there any significant changes? Did your income go up or down? Did you spend more or less than usual in any category? If you notice any major changes, it's important to investigate further. For example, if your income suddenly dropped, you need to figure out why. Was it a one-time thing, or is it a sign of a bigger problem? Similarly, if you see a spike in your spending, you need to identify the cause. Was it a necessary expense, or was it an impulse purchase you can avoid in the future? By regularly reviewing and analyzing your cash flow statement, you can catch potential problems early on. This gives you more time to adjust your budget, cut expenses, or find ways to increase your income. Remember, early detection is key to staying on top of your finances. Section 6. Taking control, aligning cash flow with your financial goals. Now comes the fun part, using your cash flow statement to achieve your financial goals. Whether you're saving for a down payment, paying off debt, or planning for retirement, your cash flow statement is your roadmap to success. Start by identifying your top financial priorities. What are your short-term and long-term goals? Once you know where you want to go, you can use your cash flow statement to figure out how to get there. If your goal is to save more money, look for areas where you can cut back on spending. Can you bring your lunch to work instead of eating out? Can you negotiate a lower rate on your car insurance? Even small changes can make a big difference over time. If you're struggling to make ends meet, you may need to consider ways to increase your income. Could you take on a side hustle? Could you ask for a raise at work? Don't be afraid to get creative and explore all your options. Remember, your cash flow statement is a living document. As your income, expenses, and financial goals change, you'll need to adjust your budget accordingly. But by staying on top of your cash flow and making conscious spending decisions, you can achieve your financial dreams and live a life of financial freedom. Join us. Click the link below for short, sharp, simple video courses that give you confidence and street-smart business skills to simplify accounting and focus on growing your business to succeed.